Are you struggling with letting your winners run? In this video, I'm going to show you a four-step framework to keep more of your profits. Are you ready to let your winners run? What if you could compound your returns at 20 to 35% multiple times per year? What would that do to your portfolio? Today, I want to take you inside the strategy and tactics of building wealth by letting your winners run. I'm your guide, and I want you to discover the aha moments for yourself. Let's walk through the four strategic stages of the strategic tactical compounding method. By the end, you'll know exactly when to go, when to wait, and when to step aside. So stick around because in a few minutes, I'll show you how this works using TQQ in real time. Remember, trading involves risk, but past performance is not indicative of future performance. Always do your own research before you make your trading decisions. So imagine for a moment you see trades with total clarity. What could that feel like? I know it took me a long time to get to that place in my own trading where I trusted the system and trusted myself. These four stages that we're going to be talking about are like checkpoints on your journey. And I know once I discovered these, it has greatly enhanced and made my trading so much better. And it's really nice to watch some of the returns when they start hitting, 50%, 75%, even 100% for a year. Through three, all connect with condition red. Correction, condition green. Your signal that it's safe to go. Then in stage four, flips the condition to red. Your signal in that case is to basically protect your profits. And think about it this way: instead of guessing, you'll have a roadmap and know exactly when to act. And if you follow it, the path becomes clear. Each of these will be revealed as we move ahead. Stage three and four pay particular attention because they will show you how to let your winners run. I thought this quote was really good from Philip Fisher. The stock market is filled with individuals who know the price of everything but the value of nothing. Stage one is where it all began. Stage one, the daily charts, is what I want to be taking a look at. It shows momentum starting to turn, as we'll see over here, starting to turn up. Well, what do? The TSI, which is my favorite momentum indicator, comes up through from oversold. The 8-day EMA crosses above the 20-day EMA. And I'm going to show you a chart of TQQ here shortly that shows exactly that. That's your early condition green. It's a short term saying, hey, time to start nibbling or getting in as prices continue to move up. So now let me be real with you. I've missed stage one oftentimes because I was waiting or I was trying to over anticipate it. And if I'm too early for stage one, oftentimes that rips my face off and I get taken out for a loss because I hit my stop losses. Or I hesitate, maybe, the move wouldn't last. I was afraid. Then I stopped watching it and forgot about it. And then I went back a couple of weeks later and went, ah, and just wanted to kick myself in the butt for not being on time and not paying attention. And that's what happens. The stock exploded higher in stage two, stage three without me. Pretty painful, right? The lesson learned is I want you to learn today is this: be patient, be prepared. The market often gives you second chances if you stay vigilant. A stage one is about being ready for that opportunity. Okay, guys, here is that chart of TQQ. As you can see, this is going back to actually earlier this year in February of 2025, and went into a fairly nasty correction, dropped down here. How much did we drop? We dropped down about 61%. But then price action started putting in a consolidation pattern and started working their way back up. Price action started working its way back up, and then pow, the 8-day crosses the 20-day, and that's the first indication that I have a green light. Now, I will make it clear some traders may be looking over in this area if they get a proper trigger, because we're looking for support, reversal candle, and reversal of momentum. So they may be looking to get in early here. However, having the confirmation of the 8-day crossing the 20 is very important. And then from there, what happens? Price action continues to just continue to climb. And then as you see that little gold box right there, that's the next level that we're going to be looking at. Confidence builder. The 20 crosses the 50. That's the 20-day EMA. That's what I utilize. The 20-day EMA crosses the 50-day EMA. So that basically now puts me into a more significant longer term uptrend. On the weekly chart, what this equates to is the four week crossing the 10 week, because the 10 week on the weekly chart equates to the 50-day, and the 4 week equates to the 20-day. When this stage lights up, then we have the second condition green. We want to be looking to build a position and have it grow. Think about it this way. You know, think about how much calmer you'll feel knowing you're adding at the right time instead of chasing after the runaway move. We're being patient, we're being prepared. What does this look like on the chart? Glad you asked. Let's pop over here and I'll show you on the chart. As you can see right there, this is where the 20 crosses the 50. Now, as long as we keep rolling that way, what are we waiting for? We're waiting for basically not to buy up here. What I'm looking to do is I'm looking to buy when we get the pullback. But this condition right here, as you can see, this condition right here gives me my second, more or less green light or green arrow. I want to be long. And so I'm not looking to short. I'm looking for pullbacks, pullbacks, pullbacks into the 20-day moving average and occasionally the 8 or the 50-day moving average. Okay, I love looking at this on the weekly chart because you can see my 4 week cross my 10 week, which is right there. And you'll notice that golden box that correlates precisely with what happened on the daily chart. So I then look for my pullbacks. The first week, no pullback. Second week, no pullback. Third week, yeah, get into 3 weeks, 4 weeks into this. I get a pullback into the 20-day or the 4 week. That's my opportunity to get on board. Check out what happened with the TSI down here, though. We broke up right there, and it has stayed in the up position all the way. So this is a strong bullish move that started originally on the 7th of April, 2025. Stage 3 is where the excitement, I think, really begins because it basically, what it's doing is it's showing us that, okay, this could be an exceptionally strong move. The 50-day has now crossed above the 200-day, and it shows that this is a power trend moving to the upside. But when you see this, it crosses on the daily, the weekly, and the monthly. And so that constitutes, in my book, a long-term green condition. I'm no longer I'm waiting for pullbacks, but I'm not considering at this particular time trying to close out all my positions or try to go to a short position. So this is my signal to go long with my maximum confidence. And this is when you let your winners run. You don't worry, and don't worry because we will circle back to see how stage 4 makes sure you never give it all back. So stay with me. Okay, I'll stay here on the weekly chart to see what this looks like. And I just click it aside a couple of more times, and you'll see right there, in this particular case, the 200-day on the weekly chart is a 40-week moving average. The 10 weeks crosses above that right here. And as I continue to roll out, as you can see, price actions have stayed above the 50-day for all the way through this past week. I mean, this is real live charts, guys. That was Friday's or last week's candlestick. And so Price actions have stayed above it. I have no reason to go into a bearish mode because one of the good things about what I do with autopilot trading is I take my profits as we go up. So I'm taking profits at 10%, then 20%. And then once I get the pullback, I reload and I start all over again. So if I would, let's say I would have gotten in, maybe say I missed all this stuff down here and would have gotten in on this pullback right here. Unless I just stayed with it. Well, how much of a return would I have had? Well, to the close in 54 days and or 23 bars, that's 23 weeks, I would have picked up about 53%. So again, as you know, with my TQQ system, that's going to compound multiple times per year to reach somewhere between 75 and 100% on a yearly basis. So with that said, what does this look like on the monthly charts? We haven't gone to the monthly charts yet. And as you can see on the monthly charts, I only show two moving averages. This one reflects the 200-day, this one, the 50-day moving average. And if you'll see, that equates to the 2-month moving average. And then this one, I think, is the 9-month moving average, equates to the 200-day. Another thing to take away from this chart is when we had the long signal down here back in March of 2023, note we did not get a close below the 50. Well, one right there or below the 200 was short lived until all the way up here. So that would have given us a potential for a run of right there, about 239% in 701 days. So let me know what you think about this particular way of doing things. So now let's go ahead to stage 4. Stage 4 is your defense. A close below the 50-day moving average on the EMA is and the TSI is starting to roll over, is a good time to start taking some profits or closing a position completely. That we start developing a condition red, that is a no-go. I am not looking to buy. I'm looking to basically protect. And this is where you exit longs and reset to cash. And here's the kicker. Cash is not a failure. Just because one of my trailing stops gets hit, typically, if a trailing stock gets hit, it means that that position was a winning position and showed a profit. Cash is a position. Think about it like we're planting a crop. We start harvesting, taking off the profits. And at the very end of the growing season, we have to cut down the rest of the plants to harvest the last bit. Does that mean that that's a bad thing? No, because unless we harvest, we can't replant for the next growing season. So this is your shield, keeping your capital safe and your emotions calm. So how much stress would it take off your shoulders if a clear rule that said, this is when you stop? So let's take a look at what that looks like on the charts. And I'll just stay right here right now. I want to draw back here to early in the year. And where this is right in this area right here. As you can see, that is back on the January 2022. So I'm going to do a little magic here and draw a little box because I want to go and I want to look at what was going on with the other, pieces of this. So on this, my 50-day crosses back below my 200. And I want to say, hey, I'm going to not be in that trade. I'm not going to try to trade as long as price actions are that way. I'm looking for the next reversal here. Hopefully you'll be able to take this idea and look that longer term monthly chart to give you a real good clue whether you want to stay long or when it's time to stay bullish or when it's time to say, okay, it's time to pull everything off the table and wait for the setup. So what does this look like on a weekly chart? Hopefully it crossed across, and it doesn't look like it did because I was identifying. Oh, here we go. We have to go back in time. There we go. And as you know, what happened first? Well, the 20 crossed the 50 right up here. So again, as you see, as we work back towards this, we start seeing, okay, this is setting up where that would have been my early out, one of my early outs. So I would have gotten out at let's say $69. Let's say I would have entered, even if I would have had a late entry here and gotten out there. Okay, that's about a 29% move over a 91-day period. Can you live with that? And then finally, bopping up from over to the daily chart. The daily chart starts giving us a whole lot of additional signals in that the 8 crossed the 20 right there. That's on the 5th of January, 2022. And then it never reached back above it until right there. Got a little bit of a move up here. And that may have been a trade that you would have taken because the TSI was going. But note, during that whole time, once we dropped below the 50, the 20 never got back above the 50. So if that would have been a counter trend trade, we'd have to be quick on our toes to get out of it with a nice profit or just stand aside. Leave a comment down below just to say, hey, Dennis, this is really pretty good stuff. Next, we're going to step into the area of the Qs. And I want to run through a couple of things on how this could work for the Qs and reinforce some of the things that we have been working on with the Qs. So let's go ahead and jump over into that. Remember, investing what is comfortable is rarely profitable. I know it's really hard to learn new stuff when you're trading because you think this really rock solid system. So let's go back into a back testing type mode and we'll do a walkthrough on that. The structural strategic tactical compounding shows how stacking the 20 to 35% cycle moves 3, 4, 5 times per year can be life changing. I mean, it can really change your ability to trade because it takes off so much pressure. TQQ has given us these chances over for AutoPilot Trading Premium Mentoring members. If you missed part 1 of this series, you can find that over in the training center. Go back and watch the replay for part 1. Remember, all the performance that we are showing here are examples, reflect real or back-tested results, and are for educational purposes only. Trading involves risk. Past performance does not guarantee future performance. So let's dig into this really quickly. What I show here is the past performance on a couple of years. 2011 to 2013, we were up 140% with the green light signal. 2015 to 2016, we had the red light signals and it said stay out of the market, but be ready to re-enter on a rebound. And then for 2020 to 22, the multi-time frame analysis showed that buy and hold was less stressful. And then in 2023 to 2025, we are still green. We've gone over that. We are still green. So what were some of the results in the past? Well, if one had taken $1,000 10 years ago and just basically traded 3 to 4 to 5, 6 times per year, you would have generated well over $1 million worth of profits. Whether you look at partial profits or compounding fully, both approaches beat the buy and hold. While good, that it led to some extreme drawdowns, which I like. I don't like drawdowns. I want to avoid those as much as possible. And if you take a look at this particular chart, you'll see that one, the green line is what we did with the TQQ swing trading system, basically only capturing half the return on the swings. And the thing that blew me away when I started analyzing this and actually trading this was this. Check this out. 2022. A buy and hold of TQQ resulted in a negative 79% drawdown. However, swing trading and utilizing the strategic tactical compounding generated 186%. And through 2024, again, check out the numbers. 2023, a little bit different. The TQQ buy and hold actually beat the TQQ swing trading. However, my objective with the TQQ swing trading return was that it returned somewhere between 75 to 100%. That's it. And as long as I'm in those parameters, I am perfectly happy with what's going on here. Got it? And you can see this is what we're able to generate through 2024, going all the way back to 2011. Now, we started trading this live back in this area here. All the rest was back testing, but in 2019, we started trading it live and really pleased with the results we've been able to provide with the timing factor for our and again, no promise of no, you can't promise that that's going to be the return forever. However, it does by being systematic, having a plan, having protection. Do all the trades win? No, they don't. At the same time, when we are averaging, 3 to 6 winning trades with this method, it works out really well. And we typically, our stop loss is around 5 to 7%. So I love what Einstein always said is compounding interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. I hope an aha moment here. Here's what I hope clicks in for you today. Each stage stacks confidence and reduces guesswork. Condition the condition green removes hesitation. You know when it's time to go. And then structure takes away stress. Having that framework is very important. The small tactical wins multiply into massive returns over to stage four. I searched for years trying to really lock down on what stage four was, what gave the best enough reign for the trade to go the direction you wanted it to go, but wasn't foolish. In other words, where do you really get out? And I think with this particular framework, we've really honed in on being out of the market at stage four or slightly after stage four is great for protecting profits and preserving capital. And when we're waiting there, what do you do? Well, go on vacation. So, which one of these hit home for you today? Leave a comment down in the bottom. Share this video with as many people as you possibly can. If you're over on the YouTube channel, make sure you subscribe to the channel because we hit this kind of training consistently throughout the year. So, time for you to take action. So, learn the four stages of the wealth acceleration. The STC, strategic tactical compounding, is the engine that makes it work. So, what have you learned from the strategic stages, step by step plan, and the tactics to use with them? What are you going to try to implement immediately? So, this week, I encourage you apply the stages to your charts, mark where condition green shows up, and see how you would play it. See how it plays out. This is how clarity becomes confidence. You are ready to use this framework on your next trade. And here's what I absolutely love leave a comment with your biggest aha moment from this video. I want to know what clicked for you because those insights are where real growth appears and happens. And if I know where that happened, it helps us to develop future videos that we can share with you about how to trade TQQ, how to trade the crypto. If I can help people put more money in their pocket, I feel like I have succeeded in what I am trying to do. Go deeper, you can grab a copy of my book, Trade Your Way to Freedom. It has every setup framework we've covered, chatted about.